Good morning friends and welcome to the pre-market view. Friends, European markets were down about 0.7% and US markets also started off on a weak note, and at one point the Dow was down almost 100 points, but there was a sharp pullback and actually it closed just about 30-35 points down. Asian markets, when we look at them today, they were also soft, but since Chinese GDP data that came out at 7.6% was pretty much in line with expectations, though on a quarter-on-quarter basis there is a slowdown there. Against 8.1 it is down to 7.6, but the 7.6 is pretty much in line with expectations, and which is why we are seeing some kind of a recovery in the Asian markets. No major runaway upside, but a bit recovery from their starting point. Friends, also we had a news that Moody's has downgraded Italy's credit rating, and the bond yields continue to remain high, and which is why we have seen that the euro has actually gone down to almost 1.2199 and the dollar index is at 83.66. so the risk on trade actually is receding now, and we are seeing some kind of a pressure on most of these currencies versus the dollar. In terms of flows, friend, we continue to see a net buying by the FIs in the cash market, as I was pointing out earlier, that from July 1st till now FIs have pumped in almost 3400 crore in the market. At the same time, the domestic institutions have been selling to the tune of about 2900 crore. So there is a net balancing out of the entire flow situation. On that note, let me invite Shaival to take us through the F&O cues and the strategies that we could possibly do in the current scenario. Hi Shaival.
Good morning.
What are the important cues that you are getting from the F&O market? And since we already have moved into the result season, Infosys numbers were out and there was a major zigzag, almost about 8-9% cut on that one. Also TCS came out with numbers. So we had also rolled out one strategy for Infosys. So can you please take us through what is the update there?
Yeah, let me draw your attention first towards the activity which has taken place in the yesterday's trade in Nifty future. We have seen that the markets have opened gap down because of the Infosys result, and even the IIP numbers were not able to lure the investor sentiments. And from that point of view, the market continued to consolidate in a negative range all through the day. But during last hour of trade, we have seen some long positions have taken place in the market because of the positive expectations from TCS results post markets. So the PCR ratio has dropped down to 1.15 compared to 1.20, and what we have seen is that the implied volatility has increased very marginally, say by 20 to 50 basis point. We were expecting a huge increase in the implied volatility, but the thing has not happened so. And what we have seen is that 5,400 call option stands with the highest number of shares in the open interest, followed by 5,300 call option. And on the put side, 5,000 put option stands with the highest number of shares, followed by 4,900. So what we feel is that 5,400 on a broader from the broader perspective would remain a trend reversal point, because what we have seen is that markets were unable to surpass the 5,400 mark. So this would be the level which we need to watch out. But 5,300 on weekly basis would act as a resistance for the market, because the VWAP is 5,300 and markets have closed below this. So our bias for the market is negative, with lower range being 5,150, as we have seen that 5,200 put option has seen a good activity. So around 5,100, 5,200 market may find some support and market would stabilize at this moment. As you said, we have initiated a strategy on Infosys. The strategy is still open because we are expecting still an increase in the volatility. So if one has formed the strategy or one has entered into the strategy, one can hold on with the strategy. We would be continuously updating it. We will be continuously updating with the detailed PDF report. And from the intraday perspective, we have identified 3 stocks. Adani Power is looking positive with support of 50 rupees 40 paisa. Coal India is looking positive with support of 350 rupees 80 paisa, and GAIL is looking positive with support of 356.25. Now, rightly pointed out that we were expecting TCS results on the positive side, and it has actually delivered good numbers. So what we have done is we have purchased a call option of TCS 1300 strike in yesterday's trade with stop loss. One can maintain a stop loss of 15 rupees on closing basis, and one can target 60 to 80 rupees on the higher side. This call would be probably for 3 to 4 days.
Right, Sherwell, thanks a lot for that update. Friends, in terms of developments back home, first of all, Infosys, came out with numbers yesterday, and clearly there was a major disappointment, particularly the fact that the overall guidance in dollar terms, which was at about 8 to 10%, has actually been revised down to 5%, which is a major blow to the sentiment, and which is why we saw that 8 to 9% kind of a cut on the Infosys. What people feel is that though since the stock has corrected about 8 to 10%, it may not really go down much, but given the way they have actually disappointed the market back to back, we believe that the case for upside is not much. So we think that Infosys somewhere will languish around maybe 2000 to best case about 2350. We don't think there's a case for a significant upside in Infosys in the current scenario. Also, friends, TCS came out with extremely good set of numbers post market, and numbers on most of the parameters were in line with market expectations. The dollar revenue growth was 5.3%, which again was much better than Infosys, and also in terms of the net profit, the volume growth, and the overall margin and the billing rates, on most of these parameters they delivered a good set of numbers, and the management body language is also very good, as they are saying that they are not feeling any pressure as such from whatever is happening in the global marketplace, and they would definitely do much better than the NASSCOM estimates of 8 to 10% growth. But remember that TCS has been outperforming the broader market for the last 2 quarters. It is already quoting at a substantial premium to Infosys at about 18-19 times versus the Infosys premium of about 12 to 13. So we believe that again in the short run there is not a case for a substantial upside in TCS given the fact that the numbers have been good. So that is something that we would have to keep in mind. In terms of other news, SKS Microfinance has approved the allotment of preferential shares, about 44.5 crore shares. This stock should be in action. And in other news, the group of minister has approved the mortgaging of the spectrum. So some of these companies which are under financial stress, particularly RCom, could benefit from it. In fact, the entire sector could see some positive uptake because of this development. So Bharti, Idea and RCom are the stocks that would have some positive rub-off. And HDFC Bank is likely to come out with a good set of numbers. As we all know, they have been delivering consistently good growth of almost about 30%. And looking at the kind of open interest that we have seen, almost 1.68 crore share, and the stock is at all-time high. So if the numbers are in line, given the fact that there is a huge open interest, if there is a short covering, the stock can actually run up. And similarly, we have seen a good amount of open interest built up in Divi's Lab, so that stock also could remain in action. That's it from all of us, friends. Have a great weekend and see you on Monday morning.